Today we're looking at an analysis of Terawulf, ticker WLF.
Right.
The piece argues it's a strong buy you can't ignore, mostly because of its big pivot from crypto to AI and high-performance computing.
Yeah, it's a good starting point, but we can make the argument a lot sharper.
Let's do it. Okay, so first up, the biggest issue hits right at the core of the valuation.
The metrics.
Exactly. The analysis needs a much more rigorous bridge to justify moving from crypto price to sales multiples over to AI and HPC EBITDA metrics.
Yeah, it's a bit of a leap right now.
It is. I mean, you look at the numbers, WULF's PS is sitting at, 25 to 30x. Its crypto peers are down at 5 to 10x. That's a huge red flag.
A massive one. And you can't just tell a reader to ignore that and then immediately jump to some bullish 20x AI multiple.
No, you lose all credibility.
Right, and that's where the balance sheet comes in. I mean, it's the key. The piece mentions the, $712 million in cash and low debt, but it just lists it.
It doesn't deploy it as an argument.
Exactly. We need to use WULF's financial fortress to just actively neutralize that whole PS argument from the get-go.
So the suggestion is to use that impressive balance sheet to just, make the PS ratio irrelevant. How do we do that in a concrete way?
Okay, so instead of just listing the cash amount, you argue that those reserves slash the effective enterprise value drastically, especially compared to their highly leveraged peers. Suddenly, that high PS ratio doesn't look so scary, right?
Right, it's put in context.
Yeah. Or you could use the minimal debt position to say, look, WULF faces basically zero dilution risk over the next year, maybe 18 months. And that fact alone validates looking at future AI revenue multiples right now.
I see. So you frame the high PS as a temporary thing, an artifact of the transition that's already been defanged by the cash.
Defanged? I like that. Yes.
Okay, that feels much stronger. So we've used the balance sheet to justify the metric shift. Now let's talk about originality.
The so what factor.
Exactly. To really maximize the impact here, the report has to focus on what makes this strong buy signal special. Better than what everyone else is saying.
Yeah, that's a weakness right now. It accurately states the consensus, 11 buys, big upside.
Right, which is all information that's already baked into the market price.
Totally. It feels like you're telling me something I could find anywhere. It lacks a unique, time-sensitive reason for me to act on this today.
So the suggestion is to anchor the entire urgency of the argument around the most recent institutional validation.
You mean the FluidStack partnership and the Google stake?
Yes, the reported increase in Google stake to around 14%. Those are the game changers. That's the new information.
Because they dramatically reduce the execution risk, right? The market might have processed the idea of a pivot,
but not the certainty of it.
Exactly. Not the certainty of that institutional commitment.
So for a concrete example, we could, analyze the significance of that Google stake?
For sure. Analyze that and the locked-in 500-plus megawatt capacity. I mean, you can point to contracts potentially worth over $6.7 billion.
Wow.
Yeah, those are proof points. They compress the timeline to 2026 revenues. You can even try to quantify how much that de-risks the whole thing, making the current entry point seem, kind of irrational.
Irrational in the face of near-certain AI revenue. That's your original angle right there.
That's it.
Okay, I think this really sharpens the whole piece. So to summarize the action plan, first, really strengthen that core valuation argument. Use the huge cash position to lower the effective EV and just dismiss the old negative PS metrics. And second, leverage that very specific, very recent institutional validation, especially the Google stake, to create an original time-sensitive catalyst that goes way beyond the analyst consensus.
You nail those 2 points. The financial fortress, and the institutional proof. And this report becomes a must-read.
Great. We look forward to seeing the revised material.